Constant, welcome. Could you please introduce yourself and talk a bit about Tencent?
Sure, so I am Constant van der Merwe. I work at Tencent, a global technology company based out of China. I have about a decade of experience in the payments industry. So you can imagine that for Tencent, I'm very much involved in our payment services.
Constant, I understand that Tencent also offers wallet services. Could you tell a bit more about that?
Yes, so I think the interesting thing about what Tencent does in the space with wallets is that it offers really an integrative ecosystem, and the payment piece, the wallet piece, is really just an outgrowth of that ecosystem.
Yeah.
So it's what they call, of course, very famously a superApp, that it rolls up all these myriad services into one intuitive application.
Mm-hmm.
So rather than having PayPal and Facebook and Instagram and all these things separate, you have it all wrapped up into one application. And the payment piece, so WeChat Pay, is a logical extension of the ecosystem. So we try to ensure there's no disconnect between the buying experience and the paying experience, and it's really just this all-encompassing super app that you don't ever need to leave, essentially, because you find everything you want in there.
Yeah.
Your social life, your news, your payments, everything.
Yeah, it's really interesting.
Yeah, that is, of course, is also so special about it, that it combines the goods, services you want to buy and also the payment method in one app, which we don't have.
No, exactly.
Here in Europe or in the US.
Exactly. I think it's been in vogue in the West to speak about integrated commerce and trying to reduce that disconnect and to avoid that there's a rupture between buying something and paying for something.
Yeah.
And everyone wants to make payments seamless and frictionless.
Yeah.
And of course, initially that was about going from online to mobile and not having pop-ups and redirects and the difficulty inputting your payment information. But now it's moving towards a more integrated system whereby you can really wrap up a lot of associated services into the payment experience as well.
Talking about seamless payments, one buzzword that is going around in the payment sector is also buy now, pay later, BNPL.
Yes.
Could you share your views on that?
I'm personally fascinated by BNPL. I place it sort of in the middle of the continuum in terms of novelty versus established. It's sort of quasi-new, but not really new, because it does leverage the existing infrastructure that we see, so card payment rails, for instance. But I think it mirrors the growth of the card networks we saw many years ago, in the sense that it has very compelling incentive structures for all the participants in the space. And it again makes very effective use of network effects. So it offers something very attractive to users. Mm-hmm. So the users are able to very seamlessly, very easily conclude a purchase without having to pay, for instance.
Yeah.
So of course you stagger the payments, so often the first installment would even follow a while later, and you ultimately don't pay interest on that either. So it's free credit plus a very easy underwriting process. It's very easy to sign up and very fast. So from the user perspective, if you look at low ATV, low average transaction volume tickets, then it tends to be clothes or makeup, things like that. So it's very easy, very compulsive, and of course retailers like it because consumers keep coming back for it. So you increase the frequency of repurchases, you increase conversion rate from merchants, and then you have this virtuous cycle between those two participants.
Yeah, I think
and that's what the
the
BNPLs can also charge a lot for, because there's a lot of network effects that are being leveraged.
Yeah, I think that is a very interesting part about it. But also, if you look at it, if compared to credit cards, why wouldn't the buy now, pay later solution be the replacement of credit cards? Because in a sense, well, what I understand is that credit cards may be much more expensive, and that the buy now, pay later method is much more cheaper for the consumer, for instance.
Well, I think you've hinted at, I think, the reason why it's been so popular. Free credit, so credit cards for the consumer, they would ultimately charge an interest rate.
Yeah.
But also it's very attractive if you can just very rapidly conclude a purchase. So you don't have to, of course you have tokenization with cards, but it's qualitatively different in the sense that not only do you not have interest that you have to pay, but it's also possible to stagger the payments. So you can worry about the payments later. And it tends to be a payment term of something like 6 weeks, it varies a bit. But I mean, for consumers, your financial position today would not be materially different from what it would be in 6 weeks. So you still have comfort that you're not overextending yourself, and yet you can worry about the payments later. So I think there is an inbuilt convenience that it mirrors credit cards in the sense that it has, as I said, network effects. But also, with credit cards, you don't have the staggering of the payments, and the checkout experience may be less attractive.
Yeah, I can imagine. Maybe we discussed a couple of trends. Let's also discuss some challenges. You have PSD3 that is currently being thought of by the European Commission. They are reviewing PSD2. And they also asked EBA for their advice on it, on the review of PSD2. And I was curious to hear from you what the current challenges are of the
I think I'm happy to expand on that. I don't think it's too controversial to say that a lot of industry participants have been complaining about the lack of clarity around payment services. So to start from the beginning, how do you classify what you're doing? Is it payments? Is it not? Are you a money remitter? Are you issuing? Are you acquiring? All these things. So if you look at those payment services as defined, there's been a lot of overlap in the way they've been classified. And that often left you in the lurch if you wanted to know where you stand with a partner or what sort of authorization you need to seek. So what I think has been good is that the Commission has been looking at this, the EBA has made recommendations, and there's a clear theme there, which is that they want to clarify this, and they want to work with more distinct categories whereby you can really draw a line between the payment services and know where you stand. So there are examples, of course, where they can merge payment service 1 and 2, merge 3 and 4, make sure you know what you need to have if you're an acquirer,
have a
separating issuing and acquiring. There's many examples where they really make a push for clarifying things. So I think there's been a tough time for payments participants over the last 3 years, 4 or 5 years with PSD2, in the sense that these things have been a bit foggy, but I think it's a clear agenda now by legislators to fix this, so I think it's a very positive development.
Fix the lack of harmonization, make it all more clear, also between different, I think, directives and regulations. One of the other proposals is, of course, that you see that, for instance, the PSD would be combined with the e-money directive. That would also be, I think, a very welcome suggestion. And well, indeed, I can imagine that also global players like Tencent very much welcome the harmonization. Well, thank you very much, Constant. Very happy to have you here, and thanks a lot.
Happy to be here. Thank you.
Thanks.